Yeah, that was pretty cool. I was enjoying the music. How you doing, Chris? Can you hear me? Hello, hello, hello. Where's the chats now? Ladies and gents, can you hear us?
Yeah, I'm all sorted now. Sorry, that's my fault.
Okay, sweet, sweet, sweet. Cool. Nice, nice, nice. Well, we made it. Let me just double check. Yeah, we're live. We've got 20 people viewing. Guys, just come and say hi and like on the channel. We'll appreciate that. See who's in the building. Oh, Lawrence, legend. He's a BOT trader. Bacon, lettuce, and tomato trader.
I saw that the other day and I thought PLT. Because I swear you saw by the level. Well, I can't remember what you said, but anyway, yeah. Funny.
Yeah. No, it stands for bank level trading. It's
bank level trading.
Bank level trading, yeah.
Okay.
So a little bit SMC, mainly Elliott waves and patterns, basically. It's a nice little combination. How you doing, Lawrence? Okay, cool.
Good. So look, welcome, guys. So we're gonna start doing these once a Monday now, really, aren't we?
Yeah, 100%. Yeah, so it's gonna be quite fun.
Yeah, so we've been doing kind of forecasts, like Sunday forecasts and Wednesday forecasts, things like that. You know, Diego does a few of his own sessions. I do a few of my own sessions, and we thought, you know what? Let's get us together.
Yeah.
Let's get two masters of the trade together, because that's what we're calling ourselves, right? Masters, forex trading masters. We have 100% win rates.
Yeah, we're gurus, the best in the industry.
We never lose a trade. We have $40 million funded. No, all seriousness, we're regular guys, just like you really. And what we want to do is try and impart some wisdom. I think Diego and I are probably a little bit further along than some traders. We've been doing this quite a while. How long have you been trading for now, Diego?
Just over a decade.
Just over a decade.
Yeah.
God, 30% of your life.
More or less. I started when I was 20 something. I'm 33. I started when I was about 22, 21, more or less.
Do you know? I wish I'd started when I was 21. I started when I was 26, 27. When I say started, I see my journey in a couple of different phases, really. I kind of started off like real basic, like support and resistance trading. Rainer Tio, do you remember Rainer Tio? I think he's still about.
Yeah, rings a bell. Yeah.
Rainer Tio and the trading channel, and kind of learning how to trade from these guys, and very quickly coming unstuck. Although I had quite an interesting conversation with someone the other day. Like, if you took a strategy that you learned when you were first learning, that obviously at the time was unprofitable, do you think you could be profitable with it now? Like, do you think you could trade support and resistance and make money
right now? What, just support and resistance?
Yeah, like the classic retail strategies that everyone kind of learns when they first start. You've got like support and resistance. What else?
Yeah.
Pattern-based trading as well, that sort of stuff. Do you reckon you can make money with it now?
I reckon I can. I reckon back in the day it will be really hard because I'm like all over the place and I've got no sort of game plan or structure. Yeah. Whereas now, if you were to say you can only trade support and resistance, the first thing I'll do is I'll start backtesting. What makes a good support and resistance, right? How many wicks? How big is the rejection?
Yeah.
Is there a breakout, a fake out? Is there price action at the support resistance? So now I've got different knowledge where I can just decipher everything into just... Yeah. There'll be a million variables and I'll backtest each and every single one. The best time to trade is the best day to trade, and just stick to one that works. I never had that mindset before. Before it was like, support resistance. Oh, I'll take a win, I'll take a loss. Whoop-de-doo. Yeah. Go on to the next one. But now it's just this is what time in the markets does, right? You get experience and you just kind of level up over the years. So I can probably I'll make some profit if I was to trade support resistance.
I think it's one of those things when I've got the time to do it. I think one of the things I want to try like the old strategies that I used to trade and see how much more profitable I would be now. I think that's such an important thing. I think when you're learning to trade, it takes so long to kind of really find your feet. And I feel like there's a lot of advice that's given out by professional traders that I think is kind of misleading for new traders. Like they say, don't strategy hop. Make sure that you know, you're sticking to one strategy and you're doing, you know, don't spend too much time at the charts, you know, don't watch every candlestick. And I think, do you know what, as an experienced trader with a strategy that you are really following like completely, I think that's the right mentality. But I think in the early days you have to do that, don't you? Really, you've got a strategy hop, you've got to sit and watch every candlestick as it's formed, you've got to spend all that time in the marketplace, because you know it's like anything, isn't it? If you involve yourself in that environment constantly and you're consistently spending time in the charts, you just end up noticing things. Like I taught myself this news trading strategy. I was always told stay away from news, never trade news. And I've got a strategy now where I've gone from hating news days and thinking, oh my God, I've got 3 news events, so therefore I cannot trade this week, to now, and it's like, I can't wait for a news event. I look forward to them because they're so profitable now. But I wouldn't have done that if I'd not spent all that time in the charts watching the trades, you know?
Yeah, no, exactly that. I love the news as well, especially CPI. I've got a very specific strategy for CPI. It's like a breakout on both sides, use a little bit of fib, and it's got a crazy win rate. Back in the day, I'm not touching NFP.
Yeah.
Back in my day, right, 10 years ago, NFP was the one to trade. That was always in one direction, boom. Now NFP comes out and there's like wicks coming out left, right, and center, and it's messy. Whereas CPI now, if you look at CPI, it goes in one direction. And normally, if you've got the correct technicals, it's gonna go in that direction. I mean, I'm a big technical guy, for those of you know, right? I'm 99.9% technical, 0.5% fundamentals, and 0.5% psychology. Fundamentals, sorry, fundamentals. Yeah, definitely a technical guy.
I do feel like fundamentals is something I need to spend a bit more time on, because like I understand the news events, I understand what they do, I understand how they work, but the macro view of fundamentals, that's kind of like the next stage for me. I really need to understand.
I guess so, yeah. I guess so. That's definitely a field I'd like to touch on one day, but I don't know. At the moment, fundamentals, I'll see what news is volatile this week. And if it's, let's say, there's Aussie interest rates or whatever, I know my technicals is going to be on point. I'll just have to look at AUD USD and that's it. No stress. But obviously, you know, maybe there's a way to where I could use the fundamentals, and I don't know how it's going to give me an edge when my technicals is always on point. It's very hard to. How is it going to help me if I know Oz is going to go up because of whatever the liquidity is saying? What is the news going to do if I already know it's going to go up? It's, you know, that's my side of the argument, right?
Fair. Right, so I think we're going to get stuck into a bit of analysis, aren't we? I think we're going to do some trade recaps first. Talk through some trades that we take last week. Did you trade last week? I had quite a quiet week last week, to be fair. I only took 3 trades.
Bro, I haven't traded for 3-4 weeks.
Joking?
I'm actively looking for trades.
Yeah.
And I thought, is it me? Is it a strategy? I started second guessing myself, and I thought, no, just, you know, I have to be disciplined, have to follow the rules.
Yeah.
And then then I realized, well, because I've got a mentor that I've had from like since I was working on that trading floor. I've known him for like 6 years. I still talk to him to this day. And he was like, oh, yo, Diego, have they changed? Because he also was not really taking any trades. It was like, have they changed the recent settlement transaction deadlines day, right? Because they've got T+2, T+1. T+2 is basically when the transactions are finalized after 2 days. Hence why certain settles will come in a certain day of the week, right? They've changed it to T+1, right? So they're going to be settled the following day. That basically just changed the whole liquidity of the market. That's a whole completely different subject. I'll advise for whoever's watching to just Google T+2 and T+1. They've changed it to T+1. That's going to affect when your main settles will come. Normally, I trade within the first 2, 3, 4 hours of New York. That's now changed to, apparently now that they've changed it, into late New York afternoon. And this is why I haven't really seen any trades. It's because they've changed it recently, right? So from next week, now that I know this, I have to obviously readjust my schedule and start looking for trades within those kind of trading hours. So I haven't really taken any trades, but I'm going to start trading next week. I've got some decent setups lined up, but no trades for me. It's been almost a month. But it is what it is.
Yeah, fair play. And you know, I was doing a video for my YouTube the other day, and I had a challenge running, and I don't mind saying I blew the challenge because I got to about 9%, and then basically I was just trying to get it past, and I made a few mistakes. I was doing like mid-range trading, and I was just like, and then the more I ate into my 9%, the more my rules got kind of blurry and blurrier. So
Yeah,
I almost like reset. Last week I reset, and I was going from trading kind of 4 or 5 times a week at the start to towards the end I was trading like once or twice a day. So last week I went back, and long story short, I took 3 trades. I came out with like 4.5% on those 3 trades, and I was just like, the thing is that the double A grade setups, as I call them. So you've got your A grade setups, like the good setups that should play out, and then you've got your double A grades, which, you know, take a little bit longer, and it's difficult, and it takes a lot of testing, and testing takes a lot of time. It's difficult to understand, you know, how profitable each one of them is. You need to have so much data. So last week I just double A grade traded. I took 3 trades, and they all played out really, really nicely. Very annoyingly, I was doing some analysis.
Right?
Yeah. I was doing some analysis this morning, so I've actually cleared my charts, but I know what the trades were. So if I jump onto my screen, let's have a quick look. Let's just share my screen. That window. Right, cool. See my charts?
Yep.
Nice. Okay, so I'll show you what I did. So we had, where's Monday? Monday is here. So we had our classic kind of accumulation here over Monday, kind of end of Friday, manipulation. It's a really clean week on Euro USD. So manipulation, and then obviously our big distribution down here. And then our end of play reversal, which is this little move here. So a little tip for you guys. So for those of you who don't know kind of how candlesticks are formed, you have a kind of an order to a candle. So most candles, right, they look like this, yeah? So you've got like your candle pattern like that. Let's mark that one on. I'll make it nice and clear for you guys. So you've got your candle like that, right? And then you have a wick, which is that wick there, okay? And then you have your bottom wick down here, okay? And the reason why this happens is really just down to kind of candlestick formation. So there's an order, there's a cycle to the way candles are formed. So market opens here, okay? So where are we? The market opens here. So imagine this is the weekly candle. Okay, let's move that one up. Okay, so your market's opened here, okay? You've then had a move up, which has been your wick here, to this opening here. And then you've had your close, which was there. So this is what, if you jump up to the weekly, this is what the weekly candle would have looked like last week. Okay, so market opened here. I'll draw you across your little dotted line so you can see it. Can you see the lines clearly, Diego? Does that?
Yeah.
Okay. So your market's opened here. You've then obviously had a bit of noise kind of in and out, but then you've had your high of the week, which is this one here. So you can move that across as well. So I'll just draw it out for you really clearly. Okay. You've then had your market close, which was here. Okay. Actually, sorry, tell a lie, it would have been there. Okay, because we're obviously into Monday now. Okay, and then you've had your low of the candle. So if you look at the weekly chart on Euro USD, that would have been your candle formation. I'll make that orange just so it makes more sense. Okay, that would have been your weekly candle. That's exactly what it would have looked like. And it's really important to understand how candlesticks are formed, because there's an order to it every single week. And you normally start off with an accumulative phase where the market doesn't really do a huge amount. It kind of, you know, bumbles up and down. You know, it's interchangeable, so that at the end of Friday will kind of follow into this. Then you have a manipulative move, and this will push up. So it was, what was it on Wednesday? Was it CPO Wednesday?
Yeah,
it was something like that. Anyway, so we had a big news move like this, big move that made our high of the week. And then for the rest of the week, as you can see, we had a really clear distribution down. Okay, and the distribution is kind of the main move of the week. Now, if you want to kind of trade quite safely, I always say to my students is just trade the distribution phase, because the manipulation it's not always as clean as that. And for me, there wasn't really an entry in there I could have got involved in. So once I saw that move, for me, I'm looking, right, we've had this big move up. Overall, we're relatively bearish. Okay, so we are, trend-wise, we're relatively bearish. But this big move up, we've created a rebalancing here. So something I call efficient price action, which is where supplies, when supplies are left behind, they absolutely hate being, just get rid of that. They absolutely hate being inefficient. So when you have these big moves away, it's similar to imbalances. For those of you who understand what imbalances are, it's similar to imbalances, but it's not the exact same thing. But price hates being inefficient. So when you have these big moves down like this, the market will often come back to retest it. Now, a lot of kind of classic smart money concepts say, right, you've got to draw in your supply zone and then you're going to wait to sell from that supply zone. But I was finding more often than not that the supply zones wouldn't get tagged, and price would do exactly what it's done last week, where it kind of pushes up and it reverses for almost no reason. Well, if you look to the left of whatever that reversal is, you can normally find an area like this where you've got a clear supply. So the entire supply zone, whilst again, smart money concepts will kind of teach you that the supply is like the last up candle before the down candle. That's really just a premium area. If price got there, you get into a tighter trade with a better risk to reward, of course. But it doesn't have to do that. And in fact, the only thing that it really, really needs to do is to rebalance this area, because the weight of the sellers and the amount of sell orders that have been down in here, remember that the algorithms and the institutions, they're buying and selling everywhere. So they're buying here, they're buying here, they're buying here. So there's a rebalancing that needs to happen in order to make sure that the buy positions are closed at a small loss or a break-even point. So this is why the market is often drawn to the bottom of these supply areas. I call it IPA and EPA, which stands for inefficient price action and efficient price action. So when we reach that level, we've made efficient, and that then will often signal a reversal, of course. So we've got the reversal coming down here. I didn't trade Monday or Tuesday. A few of my traders caught that position, but for me, there was no manipulation. I like to have this sort of move where I'm coming down and I'm taking out that liquidity before I get in. So that for me would have been a perfectly valid trade, taking out the Asia low, and then I could have bought up from there. But we had news pending as well. So it was just an area where, again, I'm looking for AA setups last week. So even if I'd had that move down before, would I have taken it? Probably not, because with this news event, that news event obviously did push up high, but it could have pushed all the way down. So for me, it wasn't a risk that was worth taking in my eyes. Once I'd had that EPA created, so that level to that level, and I saw this breakdown over Wednesday, I saw then we had some really clear manipulation here. So I had the high of Asia that was raided. I then had a true breaker structure. Okay, so it's good to understand, true breaks of structure and false breaks of structure. So this, for example, here is a false breaker structure. Can anyone in the comments tell me why that's a false breaker structure before I move on? Why is that level there a false breaker structure?
All right, who can answer that?
We've got to have someone in here who knows. I reckon Troy Williams knows, if he's still here.
Yep, he's still here.
Hey, David, how are you? Psycho trader with the philosophical comments. I love it. Well, look, I'll tell you guys. So that is a false breaker structure because it's gone and raided a high to the left. So a true breaker structure will break down and it will hold that move. It will hold that move. So it won't invalidate that position. Okay. True breaker structure often comes after a false breaker structure, and it's actually a really good entry signal. That initial push down is very rarely the only push down that we get. What often happens is we get the initial push down, then we get a raid. Now, for me, I'm looking at thinking, right, I'm now ready to go. So I could have, I don't think I was busy at the time, but I could have absolutely traded off the back of that. That would have been a perfect trade. False breaker structure, raid on Asia's high, and then, sell off from there. but I knew again, knew we had news coming into the marketplace. So we had news coming in. I can't remember what it was on Thursday. Do you remember?
I don't remember actually.
Something anyway. We had FOMC on Wednesday night, and then we had something on Thursday. Anyway, so this then created a big move, liquidity sweep up here, and then I just simply got in off the back of this. So I took an engulfing pattern high above there, and then I held down to the low of Asia from the previous day. Possibly, no, actually, I took a little bit lower. No, sorry, I took out that previous day's low. So that was my trade last week. It was a beautiful trade. It played out really, really nicely. And yeah, you know, we were on to a winner. So I had my kind of bias for the week then. I kind of knew that, right, with Wednesday, Thursday, we were pushing down, probably going to go a little bit more bearish. And a similar sort of thing happened on Thursday, really. Friday. So Friday, I knew that we had a bearish market structure. But because we had this daily level down here, I didn't want to trade so close to it. If you look at this as an overall range, so we've got low to high, okay? We're now, I'm going to get rid of these boxes just to make my charts a little bit clearer for you guys. We're now very firmly into discount pricing. So this is our range, right? No one can argue that. Really clear range that we're trading within. It's a bullish range. Although we have, you know, an overbearing, bearish sentiment, we are in a bullish range. So this could be an area that we reverse from. This discount area could be an area that we reverse from. And because Asia here was formed within that discount area, for me, I was looking at thinking it's a risky trade to take more sells, because what could have quite easily happened is we had a push down and then we just had a push back up. So I wasn't in a rush to take that trade, if I'm honest. Even though, again, as you can see, it would have been a really, really nice trade. But, you know, I'm looking for AA grade setups last week. One of the things that people often don't realize about Fridays, sorry, that was Friday, yeah, because we're up to here for, that was the end of the day. Okay. So one of the things that people don't realize about Fridays, and this is both for weekly candles and daily candles, is at the end of a candle, okay, there's profit taking. So the reason why candles form like this, you have an open, high, low, and close, and you have these wicks either side, is because there's often a manipulation, which is that move. There's often a manipulation down here, which is that move. And then when the profit taking happens, people take out their positions, it naturally pushes the price up because the sellers come out of the marketplace. There's less sell positions in the market, which then means that we have, you know, some bullish price action coming back up. So what I'm looking for on a Friday afternoon, especially after kind of lunchtime, is I'm looking for a buy setup. In this scenario where we've got a bearish week, I'm looking for a buy setup. And I took a loss here. So my first position was here. It was a little bit early, admittedly. Or actually, was it that one? No, it was this one here. Okay. So we took a loss on this one, as you can see. But I was still confident that because we'd had such a bearish week that we were going to push back up. So once I saw this, and I'll just get rid of that. So I saw this. So we've got here, we've got a shift in market structure like that. We've got an imbalance left behind in there, which indicates we've got a bit of momentum in the marketplace. And then I had a lovely little engulfing pattern. I took that low below the low, stop below the low, and I held this all the way up to that high to the left. So it's a short position. Okay, and I mean by that as in like not a position you're going to hold for a particularly long length of time. You're going to close this off before the end of play on Friday. Okay, but it's a really clear position that happens almost every week. If you go back to most Fridays, so Tuesday, Wednesday, Thursday. Okay, so Friday the 7th of Jan, not a good example. Wednesday, Thursday, Friday, Tuesday, Monday, Friday.
Yeah, around 70-80% of the time, Friday is normally the low high of the week, isn't it?
That's it. Yeah,
I love a Friday trade.
So that's your end of play reversal there for Friday, 31st of May. Let's go back, find another one. Friday here, only a little one here, but still end of play reversal. So big bullish move all day Friday, and then reversal. Okay, they're not always going to be massive trades, guys. And really, they aren't massive trades, but it's a really good habit to get yourself into, because you've got to understand that when you have Friday moving one direction, towards the end of the day, it's going to end up in a different direction. So Monday, Tuesday, Wednesday, Thursday, Friday. So again, bearish. and then a pullback. And you know, when you combine them with kind of key levels like down here, and you know, you've taken out liquidity here to the left. Okay, you've taken out a liquidity point here to the left. We've got a really clear indication that there's likely to be some kind of reversal there. So I took 3 trades last week, ended up about 4.5% up. I think it was a total of about 3 on that one, 3.8, something like that. So entry was probably around there. So 3.8 on that one. Obviously, we had a loss there. And then I think ended a little bit later than that. It was about 2.5. So we ended up all in all about 4.5% up, which, you know, I was really, really happy with. And, you know, the weekly candle played out really nicely. Everything kind of fell into position. And that's kind of what you want in, you know, when you're trading. That's kind of the best places to be, right?
Yeah, quality.
What are you looking at for this week, Diego?
I haven't really done my analysis, to be fair. I glimpsed it earlier. Euro Aussie longs, more or less. DXY, I'm bullish at the moment.
Yeah.
But that's really just about it. Before I get into my point, has anyone got any questions for Chris regarding his analysis? I thought it was pretty spot on. Is there anyone with questions or anything you'd like Chris to discuss before I take over with my charts?
And David, yeah, bang on.
Yeah,
so it's false because it didn't grab liquidity before breaking. Yeah. So it's not necessarily about a false breaker structure. And I'll go back and I'll just show you that option scenario again. A false breaker structure. Let's just find a reversal for you, because you can see them on reversals really, really easily. Okay, so a false breaker structure, it's not that it hasn't grabbed liquidity. So look at this reverse. So this is the reversal that I'm looking at. Okay, this section here. Okay, that's what I'm looking at. So this did actually grab liquidity here. That was the liquidity grab. Okay, and this is at the moment, and I'll just jump up a time frame. It's probably a little bit easier to see. At the moment, we don't know whether this is a false breaker structure. Okay, but what you do need to understand is that price very rarely does this. Despite what you're taught by smart money traders, price very rarely does this. Okay, that's that classic smart money pattern, isn't it? Right? You've got a liquidity level, you've got a raid on liquidity, you've got a true breaker structure, and then you have a retest. And what you do is you sell from here, right? That's kind of the classic smart money trade. And you know, that's something that I traded for a couple of years with some success. I passed a couple of prop firm challenges with it, to be fair. I passed the CTI with it, I passed an FTMO with it, and you know, it can work. But again, and this is kind of goes back to the point we were making earlier about spending time on the charts. What I found more often than not happened was this. And within this move, you then normally get a nice little, what I call a manipulation setup. Okay, I'll just change the color of that so you can see it easier. What normally happens is you have your initial move, okay, and that's your initial breaker structure. So people try and sell from here, okay, and what happens there? Can anyone tell me in the comments what happens there? In that section, that circle that I've drawn, I'll change its color. So that orange circle there, what happens there usually? What do the masses do? So price has broken structure. It's cleared out a liquidity point to the left. We've had a breaker structure. Prices then start to come back. It's retested the supply zone like that. Okay, it's retested that supply zone. What often happens there? What do the masses do? Yeah, exactly. Sell limit, Lawrence, bang on. So what often happens is people sell there, okay? The masses jump into the marketplace, and you know, look, the algorithms, whatever you believe controls the marketplace, it doesn't really matter. Whatever is controlling the marketplace understands that a volume of orders has come in here, and it's left a load of liquidity sat above that level there. So what ultimately will happen, and test this, because you'll see this in reversals all the time, is there's a second raid on liquidity. And that second raid on liquidity is normally a really clean raid on liquidity. What I mean by that is this. You have your false breaker structure. That only becomes a false breaker structure, by the way, when this happens. So that is not a false breaker structure until that, because a true breaker structure doesn't re-break its high. Okay, so that is our true breaker structure. It doesn't re-break its high. So if price did that, oh, that's the wrong one. If price did that, okay, that then becomes a false breaker structure, but it doesn't often happen twice. It normally only happens once, okay? What's really good to look out for is if you're in an area where you're expecting a reversal and you have that initial push down, just keep an eye on that level, because what you'll normally have is that liquidity raid. And look at how clean that was, right? 3 candles above, no more than 3 candles above. That's my rule. Massive, massive, massive imbalance there. And that's that little setup that I drew out for you earlier. So push down, pull back, push down, manipulation, pull back. Okay. That trade after a false breaker structure is absolute gold. Okay. That's such a safe trade. You can get a nice tight entry on it. I probably wouldn't have taken it because of news, but the sentiment is still there. That trade there is beautiful. Okay, that trade there will see you into so many wins. And it's such a simple change. All you've got to do is just wait for that second breaker structure. You don't have to wait for the true breaker structure to get involved. You can do if you want to, but I like trading like this. Because if I've got a clear raid on liquidity, false breaker structure, re-raid on liquidity, imbalance left behind, manipulation of these internal levels, and then an engulfing pattern, I've got 1, 2, 3, 4, 5, 6 reasons to get involved in that trade. I'm getting involved in that all day long. Some of my students like taking really tight stops like that, but that sometimes can take a second re-entry. For me, I like a nice safe stop above the high because I know that's an area that if it gets raided, we're probably in a bullish market structure still. For me, that's my go-to setup, and it plays out so much.
Quality. Lawrence stops above the high. Yeah. They get wiped out. Troy stop hunt up to sell orders. Yeah, fair enough. Yeah. Cool. Troy and Lawrence, these are some of the BOT traders, so they kind of know what you're talking about.
They know the stuff. They know the stuff.
Yeah. Okie dokie.
What are you looking at for this week then, Diego?
Yeah, let me just do a quick analysis and I'll touch base as well on the schematic that you were trading. Something similar that I do. Let me show my screen. Where's my screen? But I see, obviously, I view the market a little bit different because I'm a pack guy. Share screen, window, DXY, boom, boom, boom. All right, can you see the screen?
Yep.
Right. So obviously, as you know, a lot of traders after the breaker structure will, set the sell limit wherever the prices or whatever. And what normally tends to happen, and again, it goes down to just viewing your charts over and over. It goes down to backtest and journaling. And you just start to identify certain schematics in the market, right? So this particular setup, I also don't trust it. You're not the only one.
Yeah.
Because I've been burnt myself.
But how is it taught? It's taught all the time, right?
Yeah, but everything that is taught, it's not really. This is the thing. You have to sort of be aware and put perspicacious enough to absorb the knowledge, but then at least apply it in your own niche, because maybe some traders will be able to profit from this, or some traders, again, it's all a journey, it's all a big learning process, right? This is what I was taught, but what I wasn't taught is how am I going to backtest this setup, right? That they don't really teach you that. Whereas if we look at this example, you'll get stopped out, right?
Yeah.
That's normally what tends to happen. What I've realized is that if I see this particular setup, I'm not going to trade it because I know it has a very low win rate.
Yeah.
But if I were to see, let's say, for example, something like this now, which is more or less similar to yours, I just view it different.
Yeah.
I see a QM, right?
Quasimodo.
A Quasimodo, a QM, yeah. Which is basically a left shoulder, and I'm looking to catch the right shoulder.
Okay, so you're waiting for that. So you're waiting for the true breaker structure then to form first, which is arguably a safer trade.
Yeah, there you go. So it's, for those of you who don't know what a QM is basically, it's just a right shoulder that you're forecasting, whereas a traditional head and shoulder is basically just, it's just the right shoulder, and you get involved in the break retest. This is your traditional head and shoulder. This is like I wouldn't say advanced, it's just a little bit different than, the right shoulder. And at this point of interest, you'll have your imbalances or your point of interest. And even here, if you want extra confirmation, then you can also wait for your little manipulation, break a structure, and catch the retest. So I view it in a very similar way. But I need my left shoulder as a confirmation. Otherwise, I won't trade this. Mainly because I've been burnt myself so many times. So it's not part of the checklist. But does anyone else trade QMs or Quasi-models with a combination of SMC? I'm pretty sure Lawrence and Trey probably do trade QMs. But there's some, there's quite, guys, there's 75 people viewing and we've got 1 like on Facebook. And there's like 2-3 people are actually having a conversation with us. So, let's stop being ghost traders and let's engage. Come on. Let's get the likes up. But I just wanted to add that on. What am I looking at? Let's find out. I'm not really in sync because I wasn't trading, but now I know when to trade, which should be late New York. Then I'll be looking. Let's just freestyle a basic analysis. Troy's a bit of a hybrid by the looks of it. I've done both of your courses, so I'm a bit of a hybrid. Fantastic. Okay, just to give
environment.
What's that?
Hybrid cars, very good for the environment.
Yeah, definitely. I'm a hybrid. I think everyone's a hybrid in a way, right? Because I never invented this strategy. I'm sure you never invented your strategy. You kind of just learn from different strategies.
Definitely.
Mental, sentiment, and you make it your own, right?
Yeah.
So, Troy, I wouldn't say you're a hybrid. I think you're unique, and whatever you're trading, it's your strategy.
Yeah, you just trading
ideas from us, but you're making your own. That's just how it works, to be fair. Okay, so what I trade is very, very similar, but I implement patterns and Elliott waves. For example, if I am, let's just say there is an order block here, right? Banker block. I'll call it banker block, whatever you want to call it, imbalance or whatever. On the confirmation, for those of you who don't know, is yes, you can set a limit order, or you can wait for the manipulation on this side. This is kind of just one schematic. Or even you can do the same thing and wait for a manipulation of the order block, and then you get involved after the manipulation of this, and then you get involved, right? There's different variables. You just have to kind of know your data, right? But what I tend to do, since I've been trading patterns since I literally started trading 11, 12 years ago, I'm talking, head and shoulders, flags and everything. I've obviously developed since.
What's
that?
I used to love flag patterns.
Yeah. Flag patterns, if you can combine flags, right, with SMC and Elliott waves, then, that's what I do. It kind of does, it does kind of help.
Yeah.
But I don't really trade flags. All the patterns, hexagons, octagons, head and shoulders, flags, pennants, channels, expandings, I trade what works for me based on this strategy. And my favorite pattern is the wedge, right? That's just my favorite pattern. Parallel channels, they work as well. They just have to have different win rate. They come out at a certain time and blah, blah, blah. So what I would do, instead of looking at this particular banker block, there's going to be multiple banker blocks, right? So order blocks. I'm so used to saying banker blocks. There's a bunch of order blocks on the left, as you know.
Yeah.
Right, unfilled liquidity, whatever. What I would personally tend to do is, if prices go in towards, let's say, this particular banker block, or even smashes through and there's no confirmation, even if there is confirmation here, right? Even if there's a breaker structure, I'm not going to get involved there because I need this particular setup. I need a wedge such as this. Hold on, let me just draw it out. Which is a nice little reversal pattern with Elliott waves. 1, 2, 3, 4, 5. And what I'm trading is Elliott wave 5, but on the fake out. I call this the boomerang mainly because it kind of forms, not sure if you can put two and two together, it forms a boomerang shape, right?
Yeah.
There's a fake out of the pattern and a closed back inside. So I call it a boomerang just because it's just a fake out. I just wanted a different name than a fake out, right? Just to kind of make it unique and personalized for myself. So what I would do is, if price is approaching this area, I don't really see a pattern, because at the moment, maybe there is, I don't know. At the moment, from what I can see, there is, oh, you know what? There's probably something here. So even this example here, you see this particular order block, right?
Yeah.
This to me, for me personally, this is a low probability order block. Even after confirmation, even after this, even if there's confirmation or a liquidity grab of London or Asia or New York, this for me, I'm not going to get involved because it's just not part of my personal rules. What I will personally do is essentially just wait for my setup, which is, again, I'll go back to the Elliott waves. 1, 2, 3, 4, 5. Let's just say let's just tidy this up a bit because it was a bit of a little freestyle. Hold on. I would wait for this, knowing this is going to get taken out. This is going to get taken out, and most likely, this is the one that would fit my personal rules, because there is your little boomerang. So I would either set a limit order here or wait for confirmation on the lower time frames and wait for a B123, which is basically a break of structure, retest, continuation. So there is your particular pattern. I'm trading the fake outs of the wedges with the points of interest. So if we look at, if we just remove this, if we look at, let's say DXY, you can see there is a fake out of the third tap, right?
Yeah.
There you go. There's a fake out. So a lot of traders, or whether you're a pattern trader, will probably be looking at, let's say, something like this. Obviously, I'm looking at a daily, but I'm just want to give you just a basic sort of thought process. I'm not going to go into detail right now in terms of the actual entry, because that's a different story. But just imagine this is the M15 or the H1.
Yeah.
You can see that particular order block looks like a good trade, right? But remember, I'm trading patterns, as you know. And even if there is confirmation, right, on the lower time frame, there's a confirmation, I mean, we can probably go on the H4. Let's just say here, for example, that's break structure. So technically you can take a trade here, or you can get involved on the confirmation entry, which should be approximately there, right? So does that make sense so far?
Yeah.
And yeah, there you go. And there's your trade, and you set the limit order, right? That's just going on to the other time frame. And obviously, if you press play, this is what tends to happen. It normally just does a fake out of the pattern, right? So I would tend to investigate and see what is happening basically here.
Okay.
Right, on the fake out of the pattern. And the fake out is essentially the third tap fake out, as you can see right there.
Nice.
You've got the 1, the 2, and normally there's a fake out. And also what's important is how prices are developing and behaving prior to the tap of it, right? So if we look at this information here, let me just go back, hold on. Where did it actually tap? All right, here. The way it's reacting, very, very different. Just look at this. Lots of bearish momentum, ascending compression. Over here, there's bearish momentum, but there's a wick. What followed was bullish momentum after. Over here, reversed bullish momentum after. This, for me, is a bit of a warning signal. Hence why I don't really trade the third taps, because I know there's going to be a fake out. But you can just see, even when it did react to the actual tap, let me actually zoom in here. Hold on. There we go. Look, there's me doing it properly. Zoom in a bit. I'm going to zoom in here. Hold on. So this is very, very different to the other scenarios. Look at the rejection. It's quick. It's fast. Down, up. Down, up. down, and it's, you know, the bullish candlesticks are getting smaller and smaller.
Yeah.
The wicks are becoming more evident. Whereas here, there's lots of bullish price action. So
Sure.
I'm not going to be taking a trade. I would rather just be waiting for the fake out.
Yeah.
And once the fake out is confirmed, then there's a very, very good chance that price is now going to come up here. Once price goes up then yeah, you can update the pattern and you just repeat the process. So if this is now the new target, I'm expecting a fake out of that particular scenario. You look to the left, there's liquidity, so you know there's going to be a fake out of that area.
Yeah.
Or even over here, as you can see. There, and most likely there. So right now I'm bullish bias on the dollar.
Yeah.
And I'll be looking at a fake out of these particular areas. Now, with this particular area, that's going to get smashed because it's inside of the pattern. The fake out normally happens outside of the pattern.
Yeah, sure.
So that will most likely just get destroyed. This is more or less inside of the pattern. So I'll be looking at this one as my point of interest, and potentially even this one, depending on the price action and the higher time frame analysis as well. Because you're going to get patterns within patterns, such as you're going to get imbalances within imbalances. If there's a weekly imbalance, you're going to have a H4 imbalance within that imbalance. It's the same with patterns, right?
Yeah, absolutely.
Same thing. I know there's a bit of a larger pattern here. So now what this is telling me, because of the Elliott waves, we've got a 1, 2, 3, 4, 5. If I am going to take a short here, for me, this is going to be immediately invalid, because the larger pattern takes precedence. So if I'm taking a long, I'll be targeting this trend line, but for the actual short, I'll be looking at this particular liquidity, which is in confluence with the larger pattern.
With a fake out on that trend line.
Exactly, yeah.
Yeah.
There you go. Nice. That's just a very, very simplified version of my trading style.
There you go.
There you go.
That's it. $500 worth of education given out in 10 minutes.
Yeah.
Freebie for you lot.
Yeah.
Right, we're gonna talk about. We got a topic for you guys. We're gonna try and have like a topic for you guys. So the way that these podcast live streams are going to work is we're going to have CTI traders with us sometimes. We're going to have, if we don't have a trader with us who we're interviewing, we will have a topic to discuss. And our topic today is insider tips and strategies from successful traders who have passed multiple prop firm challenges. I'm assuming we're the successful traders, are we, Diego?
I would hope so.
Fingers crossed. Fingers crossed. Okay. So I mean, look, this is probably need a bit more time than 10 minutes on this one, but let's give it our best shot.
Cool.
So, insider tips. I think the first thing for me that you really need to have is you need to have absolute confidence in your strategy. You need to know exactly when you are trading, and that's not just the time of the day or the day of the week. That's also the market conditions as well. That's also factoring in when you've got news events. I think you need to have a really clear understanding of how your strategy works. And unfortunately, there's no shortcut to this. It's going to take 2, 3, maybe 4 years potentially for you to really understand how your strategy works in all market scenarios. Because let's say you start trading in October, November, you learn the strategy by January, February, and you start live trading it by March, April. You are trading now in the best part of the year. Okay. Trading is seasonal. Okay. Like anything. And the end and the start of the year is not as good as the summer months. There's no ifs, buts, and maybes. That's just a matter of fact. So you might have really, really mastered your strategy in that 6 months that you've been learning. And then you start trading it in the 6 months that we all would agree are the better 6 months of the year. And you will end up probably losing your account in, the start of the following year. So I think having real experience, like people talk about like mastering your psychology, and I feel like it's like this buzzword that's thrown about all the time. And mastering your psychology can be simplified to building confidence in your strategy. You don't need to master your psychology.
True.
If you 100% understand your strategy and how it works. And all the mastering of your psychology is just building confidence. Now, that is live trading, that's failing, learning from mistakes, that's back testing. I think, again, there's so many things that are talked about all the time, like journaling. I know journaling is sensible. I know journaling is helpful, but I don't do it much. I didn't do it much. It's good to do for a bit, but I think just experience with your strategy is really, really important. I think data collection is good. You need to understand that your strategy is profitable. There's various backtesting softwares now that are really cool. Like FX Replay I use. It's a really cool piece of kit, and it allows you to backtest your strategy, and it records all your results for you, so you don't have to put it all on a spreadsheet. So I think having real, absolute confidence in your strategy is the place that you need to start, because you don't need to master your psychology if you know that your strategy works. The only reason you feel like your strategy is your psychology is shot is because you haven't got confidence in your strategy. And that's all it is. And you gain that. There's no shortcut. It's effort plus time. It's a simple equation. Effort plus time equals experience equals confidence. You just need to put the work in, and you need to take your time doing it, and the confidence will come as a result of it. So that's, for me, my first tip is you need to really fully understand your strategy. You need to go into the marketplace knowing that it works. If you're going into the marketplace taking trades thinking, oh, will this play out? Will this not play out? And you don't know the answer to that question. And what I mean by that is how often that setup you're taking will win and how often that setup you're taking will lose. I know that my trade setup that I showed you there earlier wins 60% of the time. So if I take 10 of them, 6 of them, every 6 should win. Simple as that.
100%, 100%. I mean, yeah, definitely you need to master the edge first, right? Because it's like, if you tell somebody trade a double bottom, that's what you can trade, by the way, and for some reason, surprise, surprise, they don't find any results. It's not their psychology, it's what Chris was saying, it's bloody strategy. You cannot just trade something and it's not working and blame it on the psychology. It doesn't work like that. You have to master the strategy, find out all the variables of the double bottom, which was a high probability, which was a low probability, gather the data, and over time, you'll see that your psychology becomes a lot easier because there's the confidence in the strategy.
Yeah, exactly.
Right? So strategy comes first, psychology comes second, and then they basically marry each other. That's normally how it works. And then fundamentals will give your strategy a push in liquidity, right? That's really it. So if you go into the markets thinking, I need to work on psychology, but then your strategy is not even bulletproof, then you're going to struggle with psychology for a very long time.
Yeah.
Right? Just how it works. To be fair, so yeah.
Absolutely, absolutely. I think as well, so many people try and rush, and look, I'll use my own example. I blew my challenge. I was doing a video for my students. I had a challenge running for 2 months. I like to take my challenges nice and slow. I got up to 9%. I ate into some drawdown, started making mistakes, started making some changes. We're all humans at the end of the day. We all have greed. We all want to make more money. Every single person in this game is here because they want to make more money. And you are lured in by the marketing. You think, $50,000 account. And you start doing the calculations. Be like, right, if I do 10% on a $50,000 account, that's $5,000. And if I get 75% of that, I'm doing 3,750, which is, twice what I'm earning in my day job. So there's this desperation to get past as quickly as possible so that you can get that money out. For me, I blew my account recently because I had a commitment to my students that I could show them in this video course I was doing that my strategy was working. And so I started making mistakes, and I've gone back and reviewed my trades. At the end of my end of this challenge, my trades were not following my strategy perfectly. So it happens to all of us. Doesn't matter how experienced you are, how many times you've been funded, you are going to make mistakes. You are going to blow accounts. I think
100%. Do you reckon if you wasn't doing it for your students and you just recorded it in your own time, do you reckon that would have happened?
Yeah, no. So basically what I've done, I'm doing another challenge now and nobody knows about it. Well, you do know, but nobody knows about it. It's just in the background. I'm not talking about it. I'm not putting results up. I'm not being visible about it at all. It's just, I'm going to complete it and then I'll do a video about it afterwards. But yeah, so and I think in that desperation, in that greed, we try and rush things. And have you noticed that every prop firm recently has taken off their time limits? It's a good thing, right? It's a good thing because the time limits, you know, look how many prop firms are being or getting into trouble lately. Okay, they're, you know, part of the crackdown on prop firms is providing traders with unreasonable rules, and one of those is a time limit, because you're forcing them to do something within a time. Like, I mean, look, when you look at how a prop firm works, ultimately you've got to make 10%, okay, on say $100,000. But when you actually break down the numbers, if you've got, just keep the numbers nice and simple, if you've got 10% maximum drawdown, you're actually only trading a $10,000 account, which means you've got to make 100%. Technically, you've got to make 100%. If you just look at your drawdown, you've got to make 100%. So what you're effectively doing is you are trading at volumes that are almost unheard of. Like, if you could make 100% consistently on a trading account, you would be the most sought after trader in the world. And prop firms, previously, they put you in positions where you had to do that within 30 days. You had to make 10% in 30 days.
Tell me about it. I was struggling trying to get that 10% in 1 month.
Yeah, I know, in 1 month. So they've taken away these time limits because they were probably unreasonable. You know, and most of the prop firms kind of followed suit with FTMO and various other companies. So they were probably unreasonable. Now they're all doing the same with no time limits, which is great. So my other tip would be take your time with it. You don't need to rush it. Okay. You spent 10, 15, 20, 30, 40 years doing whatever you're doing now, and you're earning an amount of money that for whatever reason you're not happy with. Well, if you take another 5, 10, 15, 20 years to make more money than you've ever made before, that's okay. You know, this has to be looked at as a profession. This is a business at the end of the day. You don't walk into a hospital and learn how to be a surgeon and immediately start taking home 150 grand a year after year one. You do 7 years of training for a reason. And you've got to remember that this is a skill that you're learning. If it takes you 7 years to start bringing in 150 grand in trading profits, you're still earning more or the same as a consultant surgeon, for example, not a general doctor. You're in the same or more probably than a general doctor in the same amount of time. And all you have to do is sit at your computer, and you haven't got anyone's life in your hands either. So put it into perspective that this is a multi-million-dollar industry that you can make yourself a lot of money in. You don't need to rush it. And if you rush it, you'll probably blow more accounts than you need to.
Yeah, 100%. And even if you know, let's say you have to hit a certain goal in gym or your health, right?
Yeah.
If let's say you're overweight, you're really unhealthy, do you reckon you're gonna get a 6-pack in like 1 month if you eat the right diet and you do gym twice a day?
Yeah.
No. It takes time for it to compound.
Yeah.
You just fall in love with the process, and over time you'll slowly see results. It's the same with trading. Yeah. Everyone wants the results now, right?
Yeah.
They start thinking about, you know, a certain lifestyle, but this is something that everyone experiences, to be fair. It takes years in the markets to start realizing you just have to fall in love with the process and you take your time, right? That's it. It's not gonna come quick. It's not gonna come easy. And this is why it's probably the hardest industry, but you get probably the best results because it's infinitely scalable if you can trade and gather and get investors and work in different funds or whatever. It's infinitely scalable how much you can make. But that's where you have to put the work in, right? But people don't have that mindset. People just think, I'm going to start trading. Give me a year. I'll make it. Doesn't work like that. It's just how it is, to be fair.
How long do you think it takes to genuinely become a successful, profitable trader, start to finish? Let's say you do have the right strategy and you got the right mentor. How long do you think it takes to become consistently profitable? And not just you can pass a prop firm and then blow the next one. I'm talking about go into the marketplace, know that you're going to pass any challenge that's set at you, know that you're going to make money pretty much whatever happens. How long do you think it takes to get to that point?
Well, if you've got the right mentor, bearing in mind, if the right mentor is coming with 5, 10, 15 years of experience and he's
Yeah.
done it for you,
Yeah.
that's going to just dramatically, lower that gap compared to somebody that starts fresh, learns from different sources. That person will take them. It's quite hard to sort of quantify, but I would say more than 5 years, right? Where if you've got the right strategy, the right mentor, should really just take you, from my experience, from what I've seen from my students, probably 3-6 months, maybe a little bit more, that kind of period. I've got traders now, they've taken like 100K in profits from different prop firms just in the space of a couple of months. But you need to make sure that you're consistent with everything, right? It's not just trading, it's everything. Going to sleep at the right time, at the same time every day, eating the right food, being hydrated. You don't want to eat like a big breakfast and then expect to trade the London session fully alert. No, it's everything. Everything has to be on point. Even relationships. If you're stressed in a relationship, it's going to reflect in your trading, right? Trading is it's everything basically all in one. So if you can do that, it shouldn't take you too long. But again, it all depends on the individual. Person A might be working a full-time job or 2 full-time jobs. That's going to be a little bit different to somebody that can commit a couple of hours a day, right? So it's quite hard to quantify that because there's many variables involved.
Sure. Well, look, I think, sad to say, that's our time for today, isn't it?
No, it was quite fun though.
That went quick, didn't it? That went quick. I think
it's great to having fun. 100%.
Have to get slightly better with our schedule. Make sure we can get everything in next time. Look, thanks for look, we did cover off everything, to be fair. But thanks for tuning in, guys. And those of you who have watched, please make sure when we upload these, if you are on Facebook, give us a like on Facebook. If you're on YouTube, then make sure you give us a like on YouTube as well and pop a comments in for us. I'm hoping that most of you subscribe to us already, but if you're not, make sure you do as well. We will be back next Monday, right?
Same time.
Next Monday, same time, 12:30, and go from there, really. Thank you for tuning in, guys. It's been an absolute pleasure.
Have a good one, everyone. Just make sure to repost it, like it, spread the news, and start working on yourself, right? Just take this serious. It takes time, right? It takes time. So we'll see you guys, ladies and gents, next week, same time, right?
And if any of you do need us, we are on the CTI Discord. You can find us pretty easily. You can pop us a message. You can pop us a DM, whatever you need. We're here to help. We are, yes, we have, our own students and our own mentorships, but, we're really helpful guys. So anything you need, just reach out to us. We are here to help as much as we can. This is a difficult industry. We understand how difficult it is. We've made all the mistakes that you've made. There is not a story that you could tell Diego or I that we haven't heard before. So whatever you need, guys, reach out to us. We're here to help. We want to really kind of grow and build this community and make sure that the CTI traders are the most supported and well looked after traders in the market today. So anything you need, let us know.
100%. Take care, everyone. See you next week.
Cheers.
Bye-bye.